It's becoming money again in the financial system in a very important way. And I still think we're very early, maybe third inning in a multi-year trend and a really gold reasserting itself in the financial system. Don't lower your standards.
Yeah.
I mean, it's hard. I've had this question on the road. If you lower your standards, you might actually make more money in the short term. Because the garbage companies will go up faster than the quality ones. But if you lower your standards and the market does have a correction or does have a big pullback, that's where you lose a tremendous amount of money.
Hello and welcome here from Frankfurt, Germany. My name is Kai Hoffman. I'm the JR mining guy over on X, and of course, you're a host of this channel. And I'm being joined by none other than Michael Gentile. Michael, it's great to meet you in person.
Good to see you in person.
Thanks so much for coming to Frankfurt. How are you?
Very well, thank you.
You must be excited. You must be euphoric about what is going on in the markets right now. Before we dive into some of the details, give us a sense, how was your roadshow this week?
Yep.
What is the assessment of the market? What are your thoughts right now?
Lots of energy. This is day 5, so it's been five cities in 5 days. We're still going strong. Been a lot of interest. I would say, 70% of the crowd are your dyed-in-the-wool, hardcore precious metals investors. But encouragingly, 30% of people we've met have been either family offices or investors that are new to gold, either buying physical gold but never bought a gold stock before, or thinking about allocating to gold. So we're seeing the early innings of generalist adoption in the space, which is very, very nice. And it's great. Europe's a great market. I'm really happy to be here because a lot of long-term thinking, long-term shareholders, which I try to build my companies around, cornerstone long-term perspective. And so they have that perspective of being owners of these businesses for more than 3 months. And so that's very, very refreshing as well. But it's
usually
great.
4 months in a day.
That's true. Not with the life offerings. Now it can be 3 days.
Good point. Yeah.
So it's been great. It's been really nice to be here, and we had a good group of companies, good reception. A lot of good dialogue, a lot of good debate in the one-on-ones, which has been nice as well.
What's the feedback you're getting on the market? I use the term euphoric, which I'm using very cautiously these days because I've been in this market just as long as you have, probably 14, 15 years, and I'm scared to get whacked over the head again.
Correct. I draw the analogy somewhere where you're in a city where it's rained 20 days in a row, where it's not supposed to rain, and the sun comes out for a day, and everybody expects the rain to come the next day.
Yeah.
I mean, it's been a really brutal bear market, and so for those of us that have been in the trenches, getting beat up for 7, 8 years of apathy and disinterest, when you see a surge of interest, you instantly think it's over.
Yeah.
But so that's the question I'm getting a lot. Is it over? Should I sell? I even got somebody saying, is it a bubble? And I'm like, look, the gold allocation globally prior to this rally was about 0.5% of total investor wealth was in gold or gold equities. If you look after the rally, maybe it's 1.5%. Gold's 25% of central bank balance sheets. It's becoming money again in the financial system in a very important way. And so I don't think 1.5% global allocation would tell you it's the end. And based on what I've met the last 5 days, I don't see a lot of new money coming in the sector. I see incremental steps, but the average investor, I would say, still owns zero or very, very little gold. So I don't think, can we have corrections? Absolutely. $4,000 gold, $50 silver are big, scary, round numbers. They're euphoric numbers, they're also scary numbers. So that causes people to pause and think. But I still think we're very early, maybe third inning in a multi-year trend and a really gold reasserting itself in the financial system. But people obviously are nervous after years of difficult returns.
Yeah, I feel like we're the dog chasing a car, barking at it, and all of a sudden the car stops, but we don't know what to do with it.
Yes. Yeah,
right? Now we're the dogs, like, oh crap, the car stopped. What do I do with it
now?
Right?
Exactly.
So we need to educate the dog.
Yeah.
I'm not saying that the investors are dogs, but I'm trying to go with the analogy here. Because the investors are nervous. We saw that yesterday in the market. We're recording this on Friday, October 10th.
Yep.
And yesterday we've seen a massive down day. Gold also retreated, but the mining stocks felt like they overreacted almost. So there's a lot of nervousness in the market. What should investors do right now? And maybe we'll start with a timing. Where are we in this cycle?
If you look at any bull market, they call it the wall of worry, right? So if people were not nervous, I would say that's probably much more negative sign that people are nervous. So bull markets go through these phases where in the euphoria phase, people think that nothing can go wrong and they'll never go down, and there's no fear, there's a lot of risk taking. So I feel like the correction yesterday is healthy. A little correction is healthy, a little profit taking is healthy, skepticism is healthy. That's what tells me we're early versus other bull markets where it just becomes unilateral thinking, and if you say the stocks are going to go down, you're criticized. It's the opposite. All the gold bulls are questioning themselves and asking themselves. So I think it's very healthy, that little pause we might have.
We all have PTSD.
We do have PTSD, exactly. So I think it's very, very healthy. And like I said, I keep an eye on the general adoption. These bull markets grow by more and more adoption. And so when I don't sense that all my friends are talking about gold, that the average investor is talking about gold, they're allocating to gold, they're sharing at cocktail parties which gold stocks they own, that we're not at all there yet. So I don't think it's...
We're getting slowly, though. I have a good friend, she's a dentist, and she recently told me, she's like, hey, Kai, I bought a mining stock.
Okay, yeah.
I was like, thanks for telling me, but why didn't you ask me beforehand? And then she gave me the name, and I was like, okay, sure, great, okay, move on, right? But that's sort of what we're seeing. They're seeing it in the media as well, and we're not at the mass adoption phase.
No.
Like, I think we can agree on that. But the banks are changing their tune as well, and I'm trying to figure out as well what was the domino that sort of led to that rethinking as well, like that first stone that set it all off. Do you have an idea what that could have been?
I mean, the first domino for me, obviously, the us gold bugs have been talking about the deficit. That's really tired, but it's true. It's permanently a fixture, and I think it's a permanent mega trend. But the real domino for me was when Russia invaded Ukraine, and the U.S. froze their foreign currency reserves. That was the shot, the canary in the coal mine, so to speak, where that really kicked off a major, intense allocation of central bank to physical gold. That's really what's kicked it off. And I think now and also seeing the persistency of that movement where the central banks are consistently selling treasuries. I mean, it's hard for the big banks to ignore gold when it's now the second largest reserve asset on the central bank balance sheets after the US dollar. Like if you're a big bank, that's your job, is to understand these things. So I think those two in combination are forcing the big banks to pay attention. And when they look under the hoods and they study the trends, they kind of look, they're kind of undeniable or unstoppable. You know, I use another analogy. I feel like a farmer who was planting seeds for 7 years. The sun was shining beautifully, the right amount of water, and no plants were growing. And you're questioning what's going on. Now all of a sudden the plants are starting to grow. People are paying attention, but these trends have been very, very visible for multiple years. People were not looking.
Yeah, like vindication is a term I've been using, but I've been hearing quite a bit. Do you feel vindicated? And it's a dangerous
vindication
word
is a bit of a dangerous word. Yeah, but if you say validated, let's say validated. I feel like at some point I felt like the guy in the Big Short, with short mortgages during the bubble in the US in 08, and had to put the headphones on to block out the noise because you're like, what am I missing? The fundamentals are truly there, especially with the stocks not following. And we've talked about that before in previous interviews. Like the retail interest just wasn't there because they've been distracted by AI and crypto and different things that were speculative money was going that way. I think when gold crossed through 3,000, there's a lot of skepticism there too. And when it blew past 3,000, people realized it wasn't going below 3,000, it was actually going towards 4,000. That's when the retail market started to wake up, or investors said, I have to pay attention here. So for us, have been paying attention. It is validation. Now, what's great news is the fundamentals are fantastic for the industry, the producers, and on the macro basis. So when people come to conferences like this, come to your conference next month, they're gonna see, oh, this is really a place that I can make real money, and there are real businesses that are doing really, really well.
Absolutely. Coming back to the nervousness and the risk management to a degree, like how do you manage your risk? You're obviously an insider in many companies, so it's kind of you can't really get in and out of the stock on a daily basis. And then you see gold price move yesterday. I think gold almost dropped $100 intraday. How do you manage your risk?
Yes, what I've been speaking about on this tour has really been my approach to portfolio management and allocation, what I look for in companies, and also how I allocate capital. I'm a little different because I'm more running like a private equity portfolio. Like when I make an investment, it's a 5 to 10 year horizon. I don't trade my stocks. I don't have clients asking me to redeem or increase positions in money. So it's basically my own capital. So how I manage my risk is making really good decisions on the way in. So part of your risk is managing what you pay, what's your entry point. And then if you make a good initial purchase price, typically you're in the money. And then you're just playing with your profits, so to speak. My exits are, because I have a private equity mentality and I own 10, 15, 20% of a company, it's usually on a liquidity event takeout. In the last 10 years, I've probably had 5 or 7 takeouts. And those are obviously very healthy moments for the portfolio where you can take some cash off the table, reinvest it in more junior mining stocks, or put some money into bonds or real estate, whatever you want to do. But in general, I'm quite aggressive. I'm like 90% invested of my personal worth in precious metals equities. I've been preparing for this cycle for many, many years. The farmer's finally seeing the plant start to grow. At some point, if it gets really crazy, and I think we're years from that, where everyone owns gold stocks and CNBC is talking about gold stocks, and you and I are on as guests every day because people want to talk about it. That's probably when you want to start rotating out. But for now, I'm still actually more in the planting phase. I'm not really thinking about harvesting too much yet.
Yeah. Have you ordered the combine yet, though?
We need one big one.
Right? No, that's it's true. Like I'm trying to figure out what inning we're in. As well, and trying to get a sense. Maybe we can talk about the junior mining cycle in general, because with the capital moving into the space, and I think Q3 we've already beaten the previous year, the year before, and 2022, I believe, in terms of just dollars raised within the Orion coverage universe, and there's a lot of bigger deals happened as well. We're not in the 2011 stage yet, or level yet, because we started late this year. We lost the first quarter. But the 2 quarters in between were absolutely phenomenal. We raised close to $5 billion within our space. So where on the cycle are we for the juniors in particular?
For sure. I think there's been a massive fundraising in the quarter. I think the way I would like to look at it would be, let's take a 3 or 4 year rolling basis, because it's been 3 years of starvation. if you fast for 2 days, you're probably going to have a very big deal.
And may I jump in real quick?
Yeah, please.
We've raised $4.5 billion on average over the last 3 years, which is twice as much as we raised in 2015.
Yep.
So that was really dire.
Yep.
I was going to say, the last few years haven't actually been that bad.
Yep.
It's just, the question is, where did the money flow to?
Yes, where did it flow and what type of companies are getting financed?
Exactly.
Most in the juniors micro cap space, let's say, where I operated, I would like to segment that statistic.
That's what I'm...
Because the bigger companies were raising money when they were delevering their balance sheets. The last 3-4 years, it was IM Gold doing a $300 million deal, Ken Ross doing a bit. So those are deals that were... But the funding for the sub 200 million market cap companies, I don't have the numbers at my fingertips, but anecdotally, it's been very, very dire.
Yes.
Like all the money that my company's raised the last 3 years prior to this year was me dialing for dollars, calling networks hand to hand, one investor at a time. There was no bought deals. There was no money being thrown at you. Say this is the first financing cycle since COVID for my companies where the brokers were calling me saying we have interest. Would you like to do a bought deal? Would you like to do a financing? So anecdotally, it's the first time since COVID that I've seen actual money being available to the juniors, the micro caps, right? Bigger companies different, but I think we've also been starving these companies, the juniors, for many years. Right? I think since 2015 till today, there's been a few windows to raise money, maybe 2020, 2018, and today.
And 20 was fantastic,
but in general, there has not been much money available. So that would be the first thing. If you see sustained quarter after quarter of big financings, that'll be a sign that we're maybe satiating the market. But I think for now, it's more a starvation diet, and now these companies can finally get to eat something, and they're raising some money. But I don't think we're in the doors are wide open. You can finance whatever you want anywhere.
I think grassroots explorers still struggle.
Yes.
Companies are like, hey, we have a dream here in Alaska, and we want to see if that dream becomes a reality. I don't think it's that easy for them yet. So I'm questioning, where on the trickle down, if you have the birds on the telegraph pole, where are we on the pole right now? Where's the money at?
It's probably in the resource delineation, PEA proven, deposits where acceleration stories. Some of my companies are very successful where the market sees, you're having success with a drill bit. You have 2 rigs turning, you want to go to 4. The market is sanctioning, I think, projects where they want to accelerate. I'm also seeing in the silver space a little bit more indiscriminate financing of pretty much anything. Because people want to get long silver, they want torque, they want beta.
And there are not a lot of options.
There are not a lot of options. So if you're a silver name, you probably have the most access to capital right now. But you're right, the grassroots greenfield exploration, that's typically later in the cycle. When investors say, if I make a discovery, I could have a $200 million market cap. We're not there yet because you'd rather finance a company with a proven resource than take that risk of a greenfield discovery if they don't have a big enough market cap upon success.
Absolutely. Now, I think we're seeing that, though. Discoveries do get rewarded. We've seen Prospector Metals, just to mention one name, that was hyped last week. Fantastic hole.
Drills also are moving stocks for the first time in many years.
And even rollbacks get rewarded. We keep joking within our circle. Usually you get punished when you do a rollback, but now even that is looking better. So it's a really interesting times. One thing this cycle, or when there's money available, all the tide lifts all boats. Sadly, there's some boats that shouldn't be floating. How do you... Or what do you tell investors what to pay attention to? I've had quite a few pitch calls last week where I got pitched and I was like, oh God.
It's a really good question. So I always say don't confuse a bull market with intelligence. Right. So don't think because your stocks are going up that you've bought the right business or the right mining company. Remind the viewers of the show that failure is the norm in this space. So if you're buying companies to rent them as a short term, that's a different story. But if you're actually buying a company with the hope of it becoming a mine one day, they're very hard to find. So yes, bull markets will allow low quality projects to get financed. And also, you have to be careful not to finance projects that need a very high gold price and high silver price to succeed. There's reasons certain projects have failed continuously through the cycles because they don't work at lower gold prices. So if I was an investor saying, this project doesn't work at $3,000 gold, but if it's $4,000 gold, I can build this mine. Remember, all the projects that have better economics that worked at $2,000 gold are going to be in front of you in the financing curve, the big financings when you talk about building a mine or capital. So don't lower your standards. I mean, it's hard. I've had this question on the road. If you lower your standards, you might actually make more money in the short term. Because the garbage companies will go up faster than the quality ones. But if you lower your standards and the market does have a correction or does have a big pullback, that's where you lose a tremendous amount of money. And so there's a question, are you a pure speculator? Or are you like an informed speculator investor like myself, or are you an investor? What are you trying to do with your capital? But if you're buying these low quality companies, know that they're really rentals and not investments. I like to invest, so I don't typically go near those companies just because I know I can't spend my intelligence to say this is going to work and to say, well, the stock's going to go up. I'm not able to do that.
No, it's impossible. I struggle with that, and I've been telling my investors that I've been meeting here last week as well. Stay true to your principles. Please. Do me that favor, because we see companies raise $10-15 million where the founders have 16 million shares at half a penny. I was like, and you sit there, it's like, but that stock's probably going to double or triple.
Yeah, until they start selling.
Right? And then, so it's really frustrating. What are you looking for? Like, how long do you think this market has? Like, I know it's a bit of an unfair question, but what's the timescale that you're looking at? Like, we move in cycles, we know that.
Yeah.
How long do you think this one is going to be?
I still think we have multi-years left of the cycle. Not at the velocity and the intensity we've had the last 6 months, but I think I said corrections within a bear market are healthy. But I think whenever I'm long a thesis, I'm always checking my thesis and saying what could be wrong with my gold thesis. You know, honestly, one of the red flags I had several months ago was when Elon Musk came in as Doge, because one of my theses has been runaway spending and controlling debt and deficits are just out of control. And I said if there's one guy in the world that could potentially get the U.S. government more efficient, more lean, more controlling spending, was Elon Musk. And even after 3 months, he did a good job for a few months, tried to throw up his hands, and then right after you have the big beautiful bill. Big deficits. So you always got to check your thesis, but I'm saying what's going to shift people away from the trend of diversifying away from the U.S. dollar? What's going to make people believe that U.S. government spending is sustainable and deficits are going to be under control? I'm not seeing that in Europe. I'm not seeing that in the U.S. So I think we have a real permanent bid in gold on a physical basis. And like we said earlier, the rotation of capital by any stretch does not feel like it's overdone. So that's our two underpinning backdrops. Along the way, we'll have corrections, but I still think we got many years left in this cycle.
What could be the biggest momentum killer?
In the short term, like just as an owner of equities, would be a market crash.
Yeah.
Like the tech market rolling over, but that would be actually quite positive for gold. And then maybe a major, structural agreement from the G7 countries to control spending, go through a period of austerity, and get their deficits and balance sheets in order.
Assign a percentage to that happening?
Very low. I said 5%, right? I mean, Warren Buffett says you could balance the budget in the U.S. in 2 seconds. If you told all the congressmen they wouldn't get a salary if the budget wasn't balanced, they would do it pretty quick. But that's not happening anytime soon.
No, it's interesting. Maybe one last question there, Michael, is we're about to get Q3 results from the producers. What are your expectations? Do you think they'll draw additional attention to the sector? What do you make of it?
Yeah, I think we're going to have very continued robust margin expansion. I sound like a broken record, but every quarter you're seeing margin expansion. And even the Q3 numbers you're going to print are going to be small compared to Q4. So we're really seeing sustained margin expansion, like record margins from the producers. And what's really interesting is that usually when gold prices run, oil prices have run. And oil prices have been quite subdued. So one of the major inputs for most mines is oil. And so you're going to see all the input costs you're seeing on mining are actually relatively tame right now versus the increase in gold price. You're going to see more free cash flow, record margins, more buybacks. We haven't talked about M&A, but I think we're going to see probably more and more M&A because the company's going to start to redeploy their capital, which are going to be healthy for the sector as well. So I think the generalist investor who's sort of been skeptical, did I miss it? When they see the Q3 and Q4 results, they're going to ask themselves, where else can I get this kind of fundamental increase in cash flow and earnings and EBITDA? And that'll draw, I think, more non-gold investors to take a look at the space.
Like one point I've been making in my interviews as well, the analysts haven't really updated their consensus view on gold.
Yep.
Like we're still looking at consensus numbers $2,500, $2,600.
Yep.
I think Ventum's the only one because I spoke with their analyst recently, said we're at 3,000. It's like, okay, that's better.
Yep.
But we're trading at 4,000. So there's still a $1,500 to maybe $1,000 difference, because when I look at the PNAF multiples, for example, like once we get that upgrade or I look at spot, those are tiny.
Absolutely.
We still have a lot of catching up to do.
Absolutely. Yeah, the consensus gold is about 2,600. If you're looking at the companies I'm traveling with, they have PEAs that they were done at $2,200 gold, and their upside bull case was like $2,800 gold. Their upside case of their PEA is now $1,200 below where the current price is. Right. So, and then like we said, you don't want you running your studies at $4,000 gold. That's not the right way to look at the sector right now. But it does show you how much latent upside is in these stocks. Should we even just settle around 4,000 gold and stay there for 3 years, there's going to be a huge upward bias to estimates and NAV and multiples in the sector.
Yeah, I think we need to just get used to a new price environment.
Correct.
That's one of my key takeaways from Beaver Creek as well. I was like, I got to rethink, because I have a long list of companies that I didn't like for a long time.
Yes.
But they might work at $3,500 or $3,000. So I have to revisit that list because it's just a different environment that we're in. Michael, thank you so much for joining us in Frankfurt.
To see you face to face.
Appreciate
Thanks for being
it.
here.
It's good to see you.
Yes.
Thanks so much. And where can people get a hold of you?
Mainly,
how do they dial for your dollars?
Yeah, mainly on YouTube. They find me. But mainly on YouTube, you type in my name and gold, and I'll pop up a bunch of great content like you're doing yourself here. And that's the best way to get a hold of me is through that and watch what I'm thinking. And people, the companies know how to find me.
Perfect. Well, very last question. What's your favorite commodity right now?
I would still say gold.
Okay.
Yeah, gold. I mean, I think silver's had a nice run. It's pretty torquey, but I think gold's still my favorite commodity. I'm starting to look at some of the neglected commodities, like nickel and lithium, I'm a contrarian. I don't say I like them. I'm not saying I'm buying them. I'm not saying I'm getting long any stocks, but I'll start to look when things get really ugly. And I think there's a lot of negative sentiment in lithium and nickel. That's probably a good time to start looking at those as well.
I recently deployed quite a bit of capital in a zinc company.
Okay, great.
So I was like, okay, let's see how that goes.
Yep.
Right? Talking about contrarian.
Yes.
So, absolutely. Fantastic. Michael, thank you so much. Everybody else, thank you so much for tuning in. Really appreciate you watching. Let us know what you think. Where are we in the cycle? What inning are we in, if you want to use a baseball analogy here? Are we in the first? Are we in the fourth? Are we in the ninth? Really curious what your thoughts are. And if you haven't done so, hit that like and subscribe button. Really appreciate it. It's a free way to support us, and we tremendously appreciate it. Thank you so much. We'll be back with more. Take care.